Hey guys, Saturday, the 14th of September. Holy moly, what a week. We had the European Central Bank. The euro was slightly lower after the 25 basis point rate cut by the European Central Bank. However, we had data from the US and the euro able to rock the boat, and now we see upside momentum and upside potential in the euro might continue. This week brewing, we have the Federal Reserve. Will there be another rate cut as well? Will there be 25 basis points downside momentum in regards to the interest rate decision? Or will we even see a bit of a more hawkish Federal Reserve, as Jerome Powell previously anticipated, stating that, hey guys, we are now ready to cut rates as well. If that's going to follow, we might see further momentum and even downside momentum in this market potentially going to unfold. Let's check out the economic events on the calendar. We got Tuesday CPI data, consumer prices from Canada. They are expected to basically weaken slightly, and so does the Canadian dollar. We see at the charts that at least the loonie, as it's called, was able to basically not gear up some sort of stronger momentum. Instead, we see that the dollar against the Canadian dollar gearing up steam to the upside. We see that the market is currently kind of potentially on the way towards higher levels. The dollar, though, the US dollar, is not really kind of quite strong. So it's interesting on and if this market is able to basically perform upside motivation. Looking further towards the euro against the Canadian dollar, we have an interesting setup here, an interesting trading setup with this pin bar candlestick basically from last month, and the market rather ready to weaken somehow further. This is though not the case. Weaker data, weaker economic data at least from Canada might obviously kind of cause the market momentum to be differently behaving. Weaker reading in CPI data, the Canadian dollar might lose. Dollar cut, euro cut might hence continue to rise somehow further. Retail sales, a bit of a backward-looking indicator, maybe nothing super of big importance, but on Wednesday morning, we start early back with consumer price data from basically Great Britain. These ones are expected not to do anything much, and the interesting story here might be basically on Thursday. Let's jump to this Thursday news event. Will the Bank of England again start to reduce interest rates? The expectation says basically not. Rates shall remain at 5%, and there is not going to be a strong hawkish news expected. Seven of the members of the committee might remain at the unchanged. That's at least according to the expectation, a fraction, and that could lead basically for the pound maybe to strengthen somehow further. And when we are looking at the pound in the charts, we see the pound was also gearing up steam here against the greenback. So basically there we go. The recent trend to slightly lower levels might actually continue. However, as the chart suggests, currently we could see that this current trend to the upside towards the 134 area might be the case, and hence obviously the pound gearing up steam somehow further. With a short-term chart here, if we can talk about it that way, based on a daily market momentum, this should be a trend, not basically a value which I draw in here. If the market is able to break the resistance zone of this area, upside might continue. If the market is going to break the recent trend line to the downside, then obviously the market might fall back to lower levels. Anyways, that's for the pound on Thursday. But let's move to the point and on the big interest rate decision back from the Federal Reserve. Will they slash rates? 5.25% is the current expectation. I might say, yes, that's at least what we currently might see in this market. And it depends on the statement as well as obviously the press conference, subsequent press conference, whether the Federal Reserve is also now being slightly and they are, as some claim, behind the curve. Will they follow up with now another further set of rate adjustments to the downside? Labor markets basically tell us that the labor data has weakened slightly. We saw consumer prices fairly recently, including producer prices this week, not doing anything much. So they basically stabilize. And this could be reason enough for the Federal Reserve to act to not lose their workers, to not lose basically employment figures, as they started to basically increase, or unemployment started to increase slightly. We saw the amount of newly created jobs from non-farm payroll. They were not really cool, so the numbers might be kind of on the correct side to push the Federal Reserve into that situation where they might be ready to basically start reducing rates anytime soon. So that could give us kind of further info and further momentum. The euro, as we started this session here, rising already earlier on. That's on Thursday. We have not really tested this 50 moving average. However, the 50 moving average might still act as a nice support here in this area, and it depends on how the market goes. Obviously, lagging slightly, the 50 moving average might basically rise slightly later to then see that the market has kind of really started to approach the zone and even tested it. But for now, what we can see is there was a bit of a resistance area broken, and it depends really on how this market goes early next week. If we see the market rising, potentially we could say there might be upside potential going to happen in the euro, and some downside momentum against the Japanese yen. Sorry, the US dollar, of course. But now brings me back to the next currency pair, the euro against the Japanese yen, which is kind of lagging behind. The Japi stronger, the euro lagging somehow, but it's more the strength of the Japanese yen, which is the last biggest news event this coming week. Friday, tentative times in the mornings, Japan time, we might see whether they are going, Governor Ueda, basically to also increase rates again. So they are on the opposite side at the moment, and they might say they could be at an interesting situation where basically a rate adjustment could follow, according to recent Bloomberg statements we followed. There could be also further motivation for the Japanese yen to gear up steam against the euro. This technical pin bar candlestick has nearly been broken basically as early as last week here. We see that also the pound against the Japanese yen is basically trading at lower levels. Also, this market is about to break the recent support, the recent low point. And if we are focusing up on following up with the US dollar, the dollar weakness, obviously the greenback, as it's called, is currently causing downside momentum to potentially continue. If we were not at this major support level, 140.80, this zone might be in focus and should still be in focus. If this zone basically lasts, we could see also some intermediate upside potential. If this zone is being broken, basically downside potential might continue. And obviously, US dollar could weaken somehow further, with further downside potential to cause here the Japanese yen's strength to unfold further. What else do we have? If we're looking at further markets, and obviously in general the US dollar back and beyond this news event here, we see that also technical levels on the dollar index point potentially to further losses in the greenback. And if this area, if this zone where the market currently trades is broken, the dollar index might actually weaken. Euro up, pound up, all the currencies against the US dollar could gear up some sort of steam. That obviously would cause the market momentum here to be quite interesting, because this could also be another sign of positive sentiment. And remember, economic data has not been utterly outstandingly positive. That's why the US Federal Reserve is going to cut rates. So with a delay, we could see as well the negative impact by rate adjustments could be negative for stock markets. However, the dollar weakness tends to be a positive sign for the equity sector, and the S&P 500 is close by their recently done all-time high. Triangle formation causing this market strong resistance, rising trend, boom, there we go, through the roof basically. Could be the next anticipated move at least we see the S&P 500 rising further. Day by day, the market looks positively set. Strong pin bar connection, another weaker trading day here a couple of days ago, but now the market's kind of up and running and obviously kind of back towards positive territory. The NASDAQ higher, the S&P higher, the Dow Jones higher, all these markets, including even the German, the DAX moving to the upside, potentially indicating upside momentum to continue. So where are we at in market momentum? We are at a positive situation, looking basically as well towards the crypto sector. We can see Bitcoin rising off this interesting zone. Currently, that's the daily chart. The Bitcoin is flirting with this moving 50 moving average here. On the weekly, we can see that this strong support area basically helped the market from falling further. We tested this zone before, and now it looks like upside potential might be seen. Bitcoin is slightly behind what we've seen in the equity sector. They are not near or close by the all-time highs like the S&P 500 currently is, but upside potential might continue, and with that, obviously, positive sentiment in general. Looking at Ether, it's falling behind still, and still positively supported. 50 moving average, long-term, 50 moving average based on the monthly chart acts as a nice support zone, so that could cause the market to move somehow higher. However, if we are looking at shorter term charts, weekly, we are still below it. Daily, we are way below it. So Ether can't follow up with the positive sentiment and the positive momentum like we've seen in stock markets. But last but not least, gold and silver. Stock markets rising, silver to the moon. And last week has been an outstanding week for silver. By the way, we bought it down at these lower levels here, and we're so far able to capitalize on this push to the upside here, which looks like it's going to unfold here. And as the chart reloads, we can see the upside potential is clearly happening. We're not far off from the resistance, technical resistance. Another product basically to look at, maybe ETF, SEL, silver mining companies. This one also kind of continues and starts with the recent upside motivation. And last but not least here, gold is really doing nicely well. And again, we had seen some all-time highs being created, unstoppable, we might say. And if now equity markets would fade at some point at least, this could be an ultra positive run for gold away from fiat currencies back to precious metals is simply what we can see at the moment in this market. So what's the outcome? Next week, we have the Federal Reserve interest rate decision, the most important news event brewing. We have the Bank of England, obviously, and the Bank of Japan. They both might offer interesting opportunities in markets, depending on how they offer their outlook and how they offer, obviously, their forward guidance in press conferences. Crypto's rising, equities near their all-time highs, and the dollar's weakness obviously the dollar weakness continues, potentially at least, with what it is and what it does at the moment. Stay tuned, guys. Thanks for tuning in. See you later. Don't forget to leave your comments below the video and obviously subscribe. See you then. Ciao.